Welcome to the Private Practice Survival Guide podcast with your host, Brandon Seigel. I'm a published author, speaker, entrepreneur, and private practice strategist dedicated to transforming the way that healthcare functions. This podcast is all about empowering you to create the change you want to see. Let's dive in. Welcome back to our quick tip episode. Today we are talking about preventing taxes that tip the scale. So at the end of the day, we got to look at our tax deductions. We got to look at our expenses. We got to look at our income. We got to do all these different things. Sometimes what happens is we don't do the appropriate planning and we end up owing more than we expect. Sometimes it's the opposite. We project higher expenses and we don't recognize that we didn't have that many expenses. So understanding the tipping point, that's crucial. That's part of our journey. So today, there's a couple things that I think are worth researching. And part of the goal of this episode is helping you understand deductions that may benefit you and that you should look at if you qualify for. So the first one that I am a huge believer in is purchasing your private practice real estate. Buy the property. You know, I remember we had I think it was like 14,000 square feet. 14,000 square feet in Los Angeles. We spent over 10 years renting that space. We could have bought a building, but we were so stuck in our muck because we didn't know, are we going to expand? Are we going to grow? The building's so expensive. We never did our research. And at the end of the day, we missed a huge opportunity. And I looked at it. So over the 20 years that we've been in business, no exaggeration, over $1 million spent in rent. I actually would anticipate close to $2 million in rent between all of our facilities. $2 million. If we had purchased properties, we would have an asset. That asset, in most cases, is an appreciating asset. But let's just say, even it depreciates. Let's say that that asset is a depreciating asset. The rate of depreciation is often lower than the cost of 100% loss in rent. And so looking at that is really crucial. And so when you're looking at your tax deductions and what you're spending, etc., I want you to prioritize owning your real estate. One of the best things my parents ever did, I remember my parents, they had California Closets. You've heard the story, but I remember the day they bought their building, and that building, even after they sold their California Closet franchise, they still owned that building. And that building became a revenue generator for them above and beyond the years of business that they had. So this can be an asset that works for you. It can be part of your opportunity. It can also be a tax shelter, a tax deduction. Again, you want to check with your tax professionals. Today's episode is not giving tax advice, but giving perspectives. And those perspectives are opportunities for you to research and decide what is right for you. But just look at how much money you put in rent and what that value is and how long you plan to be in that space. The other day I saw a practice and they signed a 10-year lease with a 10-year option. I showed them that if they plan to be there for 20 years, they could have paid off the value of a building if they bought the right building. And they had no clue. They didn't even recognize that. So recognize when you're leasing, you're often covering the mortgage for the equivalency of space. So, and more. Obviously, they need to make money. So looking at that both as a standardized business practice, and when you're buying a property, there's different things. You may buy the property under the practice, or you may buy the property under a separate LLC and rent to the practice. But looking at all of those variables can be very helpful. The next one is the Section 179 deduction. There is right now, deduct up to $1,000 or $1,222,000 is a 2025 limit for qualifying equipment, vehicles, software purchased in the tax year. This can include medical devices, office furniture. It could significantly lower your taxable income. But again, you need to make sure you qualify, but the Section 179 deduction. Another one is cost segregation for real estate. If you own your practices building, use cost segregation to accelerate depreciation on components like fixtures, HVA systems, front-loading deductions over 5 to 15 years instead of 39 years, boosting your short-term tax savings. These are just examples. Hire your child. That's another opportunity. Have you thought about that? Employing your children for legitimate work. So I got to tell you, this sounds funny, but my 13-year-old is better at Canva than I am. What if I hire her to build all of my Canva assets? I mean, summer work, that's great. Maybe I need someone to stuff envelopes. Maybe I need someone to print and organize invoices. What are the different ways? I'm not joking. My 8-year-old is better at artificial intelligence prompting than me. There's ways where I say, get me all this research and email it to me. There's plenty of opportunities for you to utilize your children and recognizing that there are areas where their sphere of influence is even greater than you know. So wages can be deductible. Children under 18 are exempt from payroll taxes, and you can invest those earnings for them even into a Roth IRA so that they have tax-free growth depending. January 28th through the 31st, 2026. Coral Gables, Florida. Your business is on the track. Are you ready to hit top speed? The Growth Code Conference is your pit stop for 4 days of proven strategies, precision leadership tools, and a tuned-up growth plan. Leave the slow lane behind and accelerate toward your best season yet. Register now at growthcodeconference.com. Retirement plan contributions. This is a big thing. I talk about it a lot. Contribute to a SEP IRA, contribute to a 401k. Look at all the different ways that retirement can not just help you, but can help your staff and how that benefits the greater good of your organization while offsetting your tax ramifications. Other things that you want to look at and research, the Augusta Rule. This is a 14-day rental. Rent your home to your business for up to 14 days per year for meetings, for events at fair market rates. That rental income is tax-free to you, and the business deducts the expense per IRS Section 288. So looking at that, health insurance premiums, that's another thing. Deduct the premiums paid for yourself, your spouse, your dependents, if self-employed and not eligible for employer-sponsored plans. But if you have an employer-sponsored plan, look at that. So one of the things that I like to do with my health insurance premiums for my employees, I want to look at creating it where I give a bottom of the barrel plan with a high coverage amount, and then they can essentially buy up. So my bottom of the barrel plan, which still includes preventative care and well checks and all of that, they get 90% coverage. But if they want a higher plan, then it's 60%. Transparently speaking, it costs me the same, but it's allowing me to provide them cost-effective solutions while also being tax-deductible business expenses. Another thing to look at is qualified business income, QBI deduction. Claim up to 20% of your qualified business income under Section 199A if your taxable income is below $191,950 for single or $383,900 married. This is for if you're a sole proprietor. This also applies to pass-through entities like LLCs or S-Corps, but phase-outs apply for higher earners. So just be aware of that. But asking your tax professional, do I qualify for a QBI deduction? It's worth asking. It's worth understanding. The other thing that a lot of us don't recognize is energy-efficient commercial building deduction. That's Section 179D. There may be where you have a building and you can deduct costs for energy efficient upgrades, whether it's LED lighting, solar panels in your practices building, up to $5.65 per square foot in 2025. This is an underutilized but ideal for owners who are renovating you're building new facilities, etc. Looking at that, because the cost of utilities is going up, not going down. How are we also taking advantage of those energy efficient deductions that may be available under that section 179D? Accountable plan for reimbursement. So set up an accountable plan to reimburse yourself for business expenses. That could be travel, that could be supplies, that could be things that are tax-free. Reimbursements are deductible by the business and not reported as personal income. So it reduces your tax burden. So these are things to look at based on qualifiable accountable plans that your tax professional deems as appropriate. So here are 5 crucial proactive tax strategies to avoid unexpected IRS payments. 1, I want you to have a quarterly CPA review with your tax professional so that you're having tax projections. Where are we at? Every quarter, look at that. 2, I want you to maximize deductions with year-round tracking. 3, I want you to optimize QBI, qualified business income deduction, strategically. 4, I want you to plan retirement contributions mid-year. 5, I want audit-proof record keeping with CPA oversight. Those are the 5 ways for you to improve the way that you plan for IRS payments, tax strategy. You don't know what you don't know. So learn, listen, research, and apply with the utilization of professionals that know what they're doing, with tax planners and CPA audit specialists. So, did you know that a 2023 report by H&R Block found that private practice owners who maximize deductions for continuing ed and professional development expenses, such as conferences and certifications, save an average of $8,000 annually on their tax bill, with 70% of owners claiming these deductions, reducing their tax liability by 15%. Pretty amazing. In the words of Benjamin Franklin, our founding father, in this world, nothing can be said to be certain except death and taxes. Thank you for tuning in to this episode of the Private Practice Survival Guide podcast. Don't forget to like us, subscribe, and listen to all our podcasts and stream it anywhere where you listen and watch your podcast. And don't forget, together we can thrive, not just survive. Thank you for tuning in to the Private Practice Survival Guide podcast. I'm incredibly grateful to each and every one of you. Exciting news. We're now available everywhere, from Spotify to Apple Podcasts to YouTube or anywhere you like to listen to your podcasts. So watch, listen, and reach out. If you love this episode, please drop a 5-star review. It truly means the world to me. Are you looking for more ways to elevate your practice? If so, now is your chance. Reach out, go to my website, or email me at brandon@wellnessworksmp.com. And remember, it's not just about surviving, it's about thriving.